Have you ever wondered how the U.S. market landscape has evolved in recent times? Well, let's take a moment to delve into the market's journey, starting from the early market movements. On April 12th, U.S. markets experienced a decline for a third consecutive day. The corporate earnings season began with underwhelming results from major banks, and geopolitical pressures added to the downward momentum. The S&P 500 tumbled 1% to 5,147.24. The Nasdaq Composite fell by 1.12% to 16,257.53. And the Dow Jones Industrial Average also declined by nearly 1% to 38,141.86. Meanwhile, the greenback hit its highest point in 2024, and treasuries climbed across the U.S. curve. Consumer sentiment dwindled as inflation expectations rose, leading investors to seek refuge in safer corners of the market, such as bonds, gold, and the dollar. Over in Europe, markets traded mixed. The FTSE edged higher, buoyed by Britain's economic output meeting expectations with a 0.1% increase in February. The DAX and the CAC, however, traded lower. Earlier in the day, Asian markets also showed a mixed performance. The Nikkei ended higher, but the Hang Seng was dragged lower by China's shrinking exports and imports for March. Back in India, the indices descended from their all-time highs and ended in the red on Friday, influenced by weak global cues. Notably, the rupee opened weaker against the dollar, with state-run banks selling dollars towards the close of the session. In the commodities market, crude prices jumped as Israel braced for a potential attack by Iran. A stronger-than-expected U.S. consumer inflation print on Wednesday boosted the dollar and U.S. bond yields. In summary, the U.S. market's recent journey has been a turbulent one, marked by declining indices, rising inflation expectations, and geopolitical pressures. Investors have sought safety in bonds, gold, and the dollar, while the commodities market has seen a surge in crude prices. As we move forward, the market landscape will undoubtedly continue to evolve, shaped by a host of factors from corporate earnings to geopolitical developments.